All right, good morning. Happy Friday. It's Friday, if you didn't know that. All righty. So S&P spiders are gapping down below this low. So it's a bearish start. It's a topping tail bar. It would be much, much worse if it had closed near the high. That would be like a no-brainer. Put a coffin nail in it, short the rally, it's going down somewhere, right? So it doesn't have a lot of support. Since, it went up as it did, and the drill, it did pull back. It didn't go quite straight up, and this was like this grinding, disgusting price action that occurred, and then the gap up, and it went a bit higher. Okay, and we got that little top and tail. So we get to SPX, and first we look at here where that is, because SPX doesn't show us where it is trading. So it had gotten down to this 391 area, which was below that bar, and now it come up a little bit. I don't know if that's real. We'll see the futures, but now back under 392. So still hanging down there at the bottom of the bar. So, if that, as I said, if this was a big green bar closing at the high, be much more potent as a bearish signal. So this certainly could be the start of a move lower. We'll have to keep an eye on this 391, since it's now we know that there's pre-market support there, that it goes down below it. And let's just drag this over a little bit. One. Well, we got a little bit of a topping pattern there, looking at a pre-market. So we don't have like a no-brainer void. So we got these pivot lows down here, just I guess this area there. We could be in for some chop. It's a Friday. It's been a bullish move up this week. If this is going to correct lower, we just might have to wait for any real momentum to occur next week. No speculation on my part. We'll see what happens here. Just looking at the structure of the support that's in this area right here, and thinking, a seller is just going to start hitting the bid real hard after this move up. Typically not. When prices retrace like this, buyers really give it up, immediately. And so I don't suspect that there's going to be a collapse. I would hope, just my own wishes, about picking up some momentum versus a choppy kind of a day, but we can't control that, of course. And give me a second here. Signal. Oh, here we go. Okay. So breadth is at a level, right? Some corrective action supports that. However, sentiment is down here, and I'm really not sure how to read this, other than I know it's in these bands and got that little bit of a highly unhistorical buy setup when these occurred like this. And so this is, close enough to aid. It's not near the red. I'm uncertain, but look, sentiment is improved, but historically, it's really kind of weird that it's improved from this level. And by the way, this is inverted because on this particular chart, some of you have asked me in the past, why my chart looks like that, because this gives me the ability to invert, because put call ratios, the number goes up, right? As it gets lower, you can see come down a little bit here. Anyway, wanted to point that out. So gapping lower, short-term high in place. I suspect based on this level of retracement, there's definitely going to be buyers on dip. So again, it supports choppy type of price action. Well, I don't expect too much today, high or low, which for SPX, that's not a bad thing. Let's clean this up. And so with the downside possibly greater than the upside with this gap down, I think 39.65 should be safe. And I'm just looking at the premium that was available. It's not a lot. Right? So 39.60 is going to be a pretty stiff resistance area. And it's at the top of yesterday's high. And it's interesting how I guess the gap down, those calls, the 39.60 is okay. But the level, the high is kind of tight for that. So it's one of those situations I wouldn't call it a no-brainer, but it should work. And if we do get some kind of a rally going early on, I would suggest taking a look at 39.65, which is 55 cents by 70 cents, and maybe that comes up a bit. On the downside, what am I? Oh, I put it down here on the 5-minute chart. Let's get rid of this. So 39.20-ish, gapping down here, right? So where the spiders are. So we've got unfilled gap. We've got a support level here that hasn't been tested. And then the bottom, the major support level. So 38.80, back to it, 38.80. There's juice here, And so 205 by 230. And going down to 38.70, you want to go to where it's no brainers, right? Which I think this thing is not, it should not collapse. So you go down to 38.70 and do a spread $1.30 by $1.50, and at 38.60, you're still 90 cents by $1.05. And there's a little bit below that. So there's plenty of premium down below with protection here to be considering the bottom side. And the further you go, the less money, but let's just say you'll go home in one piece. Your money will anyway. So I think down here is where we have a no-brainer area to consider that credit spread down there. 38.55. Traders telling me. Right. So look, the further away you can get, and especially if it does start to drop here, and the next step is go look at 38.40 as it drops down there. So, unless there is some motivation that is going to scare the hell out of this market, in no way should this come down there. And that's what we're looking for a credit spread. Where do we believe, based on this price structure, it's virtually impossible for prices to go down there? And if they did, what would happen? By that is to mean, would buyers show up aggressively? And so if they dropped and there was premium at 38.40 with a rising 50 MA is, and these overlapping bars, I would say, yes, they're going to show up aggressively. All right. So there you have it. Let's move on to the others. You guys make your own choices. And ladies, will you make your own choices? How far you want to get to what we call a danger zone. The further away you get to take the money home without an upset stomach, let's just say. All right. Qs came up to converging 20 and 50-day moving average. Right, so these are the Nasdaq futures. And here we're getting a bearish 180 reversal. So now, as I look at this and you say, well, that's a bearish bar. And I'm going to say, hey, the market ain't even open yet. This is pre-market. And it's coming down to support. So when it reaches that low, which is right here, I think it's a sucker play for shorts to get caught. And it breaks and makes a lower low, and then it rips right back up again. All right. Now, if it hits down here and at 10 o'clock, we're getting to 10:30, it hasn't popped back up, that's going to open up the door to some ugliness. But you got a round trip, rally up, sideways, and climactic drop into major support, little minor retracement, classic W pattern type of scenario. So this pattern historically says it's unlikely that it's going to get back up here, but it should bounce. Right? So this turn is not a surprise. In the green room, we talked about this was a likely sell zone. Right? We did one of those ARC ETF trades that Dan pointed out yesterday. It was an awesome trade. Was a painless trade. Let's call it that way, because from the entry up to the high, it just marched up there like a bunch of soldiers without any little pullbacks. It just was a power trend, right? It was just a beautiful setup, and it just continued to move higher with ease. And when it got up there and I said, you know what, folks, I'm taking mine. And it was a nice little trade for an intraday trade on an ETF. I don't know where they're at now, but if it looks like the Qs, it's probably looking somewhat similar. 309.5 for the Qs. Well, you got a line of defense there. Yeah, I mean, again, it's not that far away, but why would the market fall apart so much? Hey, anything can happen. Would I call that a no-brainer? I would say no. 313, it's going to bounce from here. I personally would say after it comes down here, hits this area, this pre-market 312, does it bounce back up? Oh, you mean for a long bounce? Well, yeah. I mean, hey, comes down here. The significance of 309.50, I don't know what that is. 950, but breaking this pivot low, if that's alignment with that pivot low coming down there. Yeah, let's see. Let's assess that as the market opens and see if it gets down there. Sure. All right. S&Ps, reversals happening up there. That was the line from yesterday. Made it up to the prior pivot high. Look to the left. No brainer. No trend lines, fib lines, VWAP, so on and so forth. Look to the left, people. You don't need all of these find tools. And so now as it pulls back, we've got some pre-market support there. And what's that? The low from yesterday is 38.93. So 3,900. Well, it held once. So 38.93. This is that pivot. Not a drop like the other one that we were looking at. 38.60. Should it get down there? That's pretty far. I wouldn't think it would go down there today, but if it did, take the fast route down there, which means climactic kind of move. But 38.94-ish, these pivots breaking through here could be the same scenarios what I was talking about earlier, with the NQs breaking the low and then reversing back up again. So keep that level in mind. And YM has been the strongest. So it could very well be the best opportunity for shorts, because that'll be the one that'll come down the hardest and has plenty of room to get down to this level with nothing there. All right. So ZN is selling off. ZN is the 10-year, right? Versus I have the 30-year up there. Right? Which means interest rates are going up. And right now, the markets, hedge funds, right? Those human beings that are controlling the billions, they got scared and ran under the covers when it spiked up like this and the market sold off. So should this get through here, right, they should run for cover. And that may be some reasoning to think maybe the markets will sell off a bunch today. We'll see. All right. We looked at the NQs, right, already. Here's the Russell, which has held up the best, right? Made it to new all-time highs. It's kind of a, that many green bars up. And look at the way this went up, right? Sideways, 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 spike, rest. I kind of hate these, because when you see setups that begin to move, you want to be able to jump on board and it just runs, whereas just stalling and stalling and stalling, just, chop, chop, chop. So it leaves lots of little intraday reference points there. But you've got this topping pattern. So we've got a pattern in alignment where everything can come down. It's like, okay, if you want to short one of these, which one would be the best? Well, the way this went up, I think we could make money with it. But YM, and it's still up here on the day, it's got the biggest sideways move and potential for a drop here. Where do I see a bounce on ZN? I should just throw that in here. ZN. $16.25. Oh, you asked me about TNX. Well, we usually look at the 30-year. So this has got room to come down. Let's say if it doesn't hold here and there isn't much support, to come down to 130, 128, which would definitely going to put the 10-year up above these levels, which is going to unnerve the markets. Okay. I think ultimately, and I said this in the ETF letter and weekend videos, ultimately, I think it's going to get up to 2%. That's where the stiffest resistance is. And it's showing strength, because I certainly thought it would pull back to the rising 20 when it did this, and it didn't. So buyers are aggressive. And so we got two pivot highs. The question is, can it get through it? All right, so I want to set an alert on this. Where's my alert thing? By the way, I use the alerts and do it this way. I had to go to a older version of eSignal to be able to send the data over to NinjaTrader. So some of the little fancy things that were there before are not, but hey, it's much better than pulling the data from Interactive Brokers. Okay. We looked at that. We looked at that. There's bonds and oil coming in and just kind of flatlining up there. It's up at resistance. Gold down again. All right, got it. We can see if we can see it's in this support area. Got to see if we can get a W bottom here. If we get a W bottom into next week, I think, we go long and see how far it can get up here. Not a full position. And silver coming down to the prior low also. And, bullish as hell, but let's see if the transport, do they gap down under that low here, and let's see if all these markets are firing on all cylinders on the bearish side today. So we'll assess that as it unfolds. All yours, Dan. And Dan, possibly, I know you're going away, but maybe it's a day for a VIX trade.
What are you thinking?
I don't know. I think it's going to go up, right? The market's going to go down.
Well, we got to watch a bounce.
What's that?
We have to watch a bounce here. Yeah, I posted in the weekly that I also want to watch a bounce to short 0 DTE on spiders here.
But gapping above these highs, like the market's gapping down, but okay. All yours.
All right. Yeah, tech's getting hit, obviously, rising yields, that kind of story. This has been some of the craziest volatile action I've seen in a while. I don't know if Debbie's with us yet, but Debbie asked us yesterday, hey, do you all think volatility is gone? And Greg said, no. These are crazy gaps. So we do have Google put spread that expires today. So even with the gap down, we're fine. We also have Netflix today. That's gapping down, but fine. We have Play expiring. We have a number of them expiring today. You can go through them. So I'm not going to go through things here. We're tight on time. This is my favorite long setup right now on earnings, BKE. Little breakdown failure, rising 50. This is a bull flag. That's a bull flag, folks. That's a beautiful bull flag. A counter trend, 30% retracement, and now it's breaking out, and it had earnings. So I said, let's wait 15 minutes. Just earnings stocks can be volatile in the first 30 minutes. Let's continue here. Oh, NVAX, I posted big gap up. Now, say it's gapping up 214. Yeah, it's a big gap. But if you put tape over the price here, it's big, but if I could get a little pullback here, I'll go all the way out to April. And let's see if we can sell a 145 put spread. Because people ask me, hey, Dan, when do you decide to go further out in time? And I say it's a pattern. So I got a big gap here, rounding bottom, gap fill. As long as this thing doesn't crater at the open, the odds of this low holding for a month are very high. Here's one I posted yesterday that Greg found, and I gave it a green light this morning. Buy it over the high, buy setup on the weekly. I like the fact that it's gapping down, because then it's only going to trigger if it gets its sea legs back. There's some talk about some of the Chinese internet's regulation. Riot here, you know, these things have, these are the blockchain stocks. That's a bearish gap, bearish pre-market. That could be a day trade short, 10-minute low. Can bearish gap, but not as much price void. So I like Riot better as a day trade short. Riot, I just noticed getting whacked here pre-market. I don't know why. Oh, this Coupang. This is a Korean. I think it's a Korean Groupon. And the journal said that based on yesterday's closing price, it said it's valued at $88 billion. Does anybody think a Korean coupon company is worth $88 billion? Man, oh man, I think there's some crazy speculation. It's just crazy, you know. Oh, that was loud. All right, Nat. So here's TLT, nasty gap. We talked about it already. Let me continue here. A couple more. This METX, METX, blasted pre-market here. You know, at resistance though. Pelletier. This is one had a nice close, and this is one that if it can now trade back above that, looks like a short-term low. AEYE, I think had earnings. It could be a day trade, 15-minute high. XOME. Let's see if it can make a higher low. You know, this is the area where it should make the turn right here on the 50, because we've got a buy set up on the weekly. And remember Wednesday we talked about the turn, TURN, in MT Live. So it's trying. It's not ready, but it's trying. So it's a watch. No pattern. Daku earnings down. McGraw 30-minute low. 30-minute low is a zero DTE call spread. My alarm here for TCOM just went off. You know what I did, folks? I was given this as a short naked puts, and I thought they were 1 DTE, but they were 8. And since I got to leave here in 20 minutes, I just put a bid out. I said, hey, just get me out at 35 cents. And I made a small profit, and that was the ding I just heard. All right, so I'm out of that one, but it looks good.